I personally think that if you're investing in this sector, you should have at least half of the money that you've allocated for investing in it in physical gold and silver that you keep in your possession. So, and then I've always just looked at the mining stocks as a way of getting wealth enhancement. You know, if events unfold that drive the price of gold and silver.
Silver One Resources is an exploration and development company backed by strategic investors Eric Sprott and SSR Mining. The company is focused on its Candelaria mine project in Nevada, where there is already a historic resource estimated at 127 million ounces of silver. The Candelaria mine historically was the highest grade silver producer in Nevada, generating over 68 million ounces of silver at an amazing average production rate of over 1,250 grams per ton. The project has tremendous expansion potential as past drilling has outlined deeper, high-grade silver targets for future drill programs. Silver One is highly leveraged to the price of silver and is cashed up and poised to increase shareholder value. Silver One trades in New York under the ticker SLVRF and in Toronto under the ticker SVE. To learn more, go to silverone.com. That's silverone.com. You are listening to Mining Stock Education. Thanks for tuning in. I'm your host, Bill Powers. If you'd like to engage the show, feel free to reach me as always at bill@MiningStockEducation.com. Well, silver and gold are on the rise and seem to be holding up extremely well as I record. It is gold is at about 1530 and silver is at about 1835, which are levels that we haven't seen in quite some time, at least for gold. It's been about 6 years. And so who better to talk to than fund manager, mining stock, and precious metals fund manager Dave Kranzler of Investment Research Dynamics. Dave also writes the Mining Stock Journal. So if you want more in-depth analysis and new mining stock ideas, make sure you head over to investmentresearchdynamics.com. You can read Dave's blog as well as get information about the Mining Stock Journal. With that being said, Dave, welcome back to the show.
Thanks for having me back on again, Bill. Appreciate it.
All right, let's start off with your general thoughts on gold and silver before we jump into the mining stocks. What do you think about the price action in gold and silver?
Well, first, I just want to circle back to something you said in your intro that, you know, who better to talk to than me? I'm sure there's plenty of other people that are better to talk to about it than me, but I'll do my best.
Thank you.
So gold and silver are behaving in a way that I've been involved in this sector since, say, mid-2001. You know, back when gold almost touched down at 250, and silver was right around $4, and the Huey index was around 50. So there's been, I like to say, there's been probably two bull runs, kind of from like, say, 2001 to May of 2006, and then October 2008 until, you know, the middle of 2011. So, and then I think we bottomed out again. Well, it looks like we have. I guess I should not say I think. We bottomed out again in December, and I'm just talking about gold because the mining stocks typically lag. They're, you know, usually a little bit behind, but so we bottomed out in December, really probably December 15th is probably an exact date. And I think we're at the beginning to middle of what's going to end up being a massive bull run in gold and silver. And this will take us well beyond the highs that we hit in 2011, 49 and 1900. So, and the thing that's striking about the move that gold and silver have been making now, especially since, I don't know, probably the last 5 or 6 months, maybe not quite that long, is that every time they run up, and then, you know, throughout all these, you know, these bull runs, you get these sort of fishing, Jim Sinclair calls them fishing line drops, where the banks go in and flood the COMEX with paper and drive the price lower and cover their shorts. And then it takes a while for gold and silver to recover from that. I mean, every attack on the price of gold in the paper market is met with basically a V recovery within a day or two. You know, yesterday's a good example. So yesterday was kind of the final roll day for silver, and there was a lot of silver contracts outstanding, and and longs who aren't prepared to take delivery have to be out of their position by the end of the day session for the Globex trading. So essentially, by late afternoon, you have to be out of your position, or you have to have your account funded to take delivery. So you get a lot of natural selling on the last day before first notice, which was today. And so gold and silver were hammered pretty hard. But by late afternoon, they had bounced back by the time the Globex session closed for an hour. And obviously today, well, they're kind of vacillating. Gold's vacillating between up a few bucks and flat, and silver's up 17 cents. I'm talking on a futures basis here. And it was up, I don't know, 22, 23 cents probably about an hour ago. So that's just an example of, these manipulated hits that are being met with buying. And at least I haven't seen this in the last 18 years of doing this. When you get a price attack like that, and it's in the context of near record open interest highs in COMEX gold and silver. And when the open interest gets to an extremely high level, it typically means that the banks have extremely high net short positions that they put on trying to control the price. And this is the first period of time where the price controlling hasn't worked, other than when silver ran up to 49 in 2011, and that was the banks. They had to throw in the towel there and just start covering their shorts, and that's part of what ran the price up that high. Well, I think we're going to see that again at some point.
With being virtually no pullback or very irrelevant pullbacks for at least 6 weeks, many commentators have said, wait for the pullback to enter in. Kind of transitioning to mining stocks, because mining stocks obviously move with the gold price, gold mining stocks, that is. What do you see here, or what would you recommend for those that are finally paying attention to the gold stocks and they're saying, okay, I'm looking for an entry point, but I want to wait for a pullback? What are your thoughts here?
Well, that's a natural tendency for any investor. I mean, I think the same way. I don't chase stocks down if I'm shorting them, and they're already down. Like Ulta is down almost $100 today. I wouldn't short it today. I wished I had shorted it before the market closed yesterday. So, your tendency is, okay, well, this stock spiked up. I'm going to wait and see if it pulls back, and it may not. The thing about investing, if you're trying to do it for the intermediate to long term, you're never going to pick the bottom or the top perfectly, and anyone who says they do is a liar. So if you look at the Huey index, I mean, it's at 229, and it's run up. I think it was down as low as 135 not too long ago. But the Huey was over 600 in 2011. So if we go back to at least that level, you still got more than a double left in it. So why try to be smart for 5 or 10 points on the 5 or 10 point pullback that may or may not come on the index? I mean, it's run up a lot in the last month, but it's probably going to 6 months from now, it's probably going to be over 300. So if you wait for a pullback, that pullback may never come. And so if you've got capital to allocate to the sector, put on a third of a position here and then save some gunpowder in case there is a pullback, and allocate a little bit more then. So, it's one of these things where it's never wise to throw all your money at once into something. And, again, a lot of times you might be, penny wise but pound foolish when it comes to investing. So especially like with these juniors, you get a 10-cent stock, and my partner always does this. He'll like sit there, and I'll be like, Don, we need to buy 100,000 shares of this, and he'll sit there and just put a bid in and wait, and you may or may not get filled, but and it tries to buy it slowly. I'm like, just buy it. We're not going to be if you end up getting filled at 12 cents, who cares? You're not, this stock's either worth a buck or worth zero. So, why try to be 2 cents smart? What if news is released tomorrow and the stock's all of a sudden at 15 cents? You know what I mean?
Yeah, you said that to me, exactly what you told your partner. You told that to me. I don't remember if it was on recording or off recording, but that has influenced my entry point on these, small market cap companies, 8 to 20 million ounces, 8 to $20 million market cap companies. That perspective you shared has influenced me.
Yeah, I mean, you're buying these stocks for 5 to 10 baggers. Why try to be, 2 cents or 5 cents smart on it?
Yeah, and when you buy $10,000 worth of one of these stocks, you end up driving it up sometimes 15% in a day just to take a $10,000 position.
Right.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has an excellent shareholder base with Ross Beatty owning 20%, insiders 5%, and Resource Capital Funds 8%. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to OsinoResources.com. That's OsinoResources.com. Dave, with stocks, I know that you give your premium picks and your first picks to your subscribers, but is there anything you could share with the general public listening to us now? I know it's people like when you share some of your picks and give an analysis of why you chose them.
I think I may have mentioned U.S. Gold before, and I think you know the company very well, maybe better than I do at this point. But so they've got a gold project in Nevada that it's in the sort of the southern part of the Cortez Trend, which is really the Battle Mountain Eureka Trend, but it sits along a fault line about 10 miles to the south of Barrick's Cortez Hills gold mine, which is, as you know, is one of the largest gold mines in the world. Probably one of the most profitable too. And that is, I think the official number for Cortez Hills is 15 million ounces, but the previous head of geology at U.S. Gold, Dave Mathewson, told me that everyone in Nevada knows it's probably at least 20 or 25 million ounces. So this property was stitched together by the people who founded U.S. Gold, and it took quite some time for them to stitch together all the land parcels. You had to go one by one to the families that own them and buy them from them. And Dave Mathewson, and I met with him a couple years ago, and he told me that the Keystone property has the best host rock he's ever seen, and he's been involved or led teams that have made some of the most significant gold discoveries in the Carlin Trend and the Cortez Trend in Nevada, and he knows the gold districts in Nevada. He's walked them all by foot, so essentially. And the geology of the rock underneath Keystone is strikingly similar to the geology at Cortez Hills. So anyway, to cut to the chase, it's a 20 square mile property, and they started drilling on it. I mean, they've been doing initial exploration work and prep work, and I guess they started putting some drill holes in it maybe 2 years ago, something like that. And it was just, finding a gold deposit is like looking for a needle in the haystack, except the needle, if you find it, is worth tens to hundreds of millions of dollars, in some cases billions. So they're in the middle of a drill program right now, and they're hopeful. They think they have a good shot at making a discovery. And so if they can make a discovery, and it's not guaranteed that they're going to make a discovery on this. If they don't, they'll regroup and they'll have more information to help them vector in on a discovery. So But if they do make a discovery, the stock's at 90 cents today, I think.
But yeah, it was sold off in the last week it sold off.
Yeah, I'll get to that in a sec. 'Cause but so I mean, if they make a discovery and it's a significant discovery, that this stock it could triple in a very short period of time, or more than triple. So, especially when you consider the DNA of the area where they're drilling, and and then they also have a project in Wyoming. It's a copper gold, and they also found some silver on it. It's called Copper King, and they have I think it's a pre-feasibility study or preliminary economic assessment that shows the project has a net present value of, I don't know, 200 million or something like that. And it's kind of old, and they've discovered a lot more mineralization. Plus, they also figured out there's silver in the deposit. So the project's worth a lot more than what's been indicated by the PEA or PFS. I forget which study. PEA, yeah. At any rate, I know Ed had told me, I think it was a couple years ago, he was offered $15 million for the project, and he passed on it, and they bought it for $6 million. And I think rightly, he's thinking, if we drill this out and advance it, it's going to be worth a lot more. And the gold is actually a fairly significant component of the mineralization. So, I'm bearish on copper. So if you're worried about copper, it's more the copper content is more than offset by the gold, especially with the price rise that we've had in gold and silver. And that brings up another point. I think that PEA was done at 1250 gold, and I didn't include silver in it. And so the next go around on that, they'll have one that includes value for the silver. But anyway, so let's just say on an intrinsic value basis, the project's worth the 15 million that he was offered when it was less advanced. There's only, I think there's 20 million shares outstanding. So the market cap right now at 90 cents is $18 million. I mean, they're really, from a fundamental valuation standpoint, there's really no downside to this stock at this price level, because, just assume 15 million for Copper King. So that's 75 cents basically per share. And then they've got 6 million in cash, which is going to be depleted as they advance Keystone. And then you got to put in some value for the optionality upside of Keystone. I mean, it's definitely a huge mineralized system on that property. And now it's just a function of finding out where the mineralization has, and I just for lack of a better term, has coagulated into something that's a mineable deposit. And I think they're going to find it eventually. It may not happen in this go around of drilling, but these projects sometimes take several years before you can find a mineable deposit. I think they'll do it a lot sooner than that, just because of the pedigree of the geologists that are working on it. So at any rate, I don't know why the stock sold off. I spoke to or exchanged emails with the largest shareholder, a guy named Luke Norman, who I think you interviewed. And he had no idea where the selling was coming from. There's not many large holders. There's only a couple large holders outside of sort of the insiders and the investors that are friendly to insiders, like my fund. So, and Ed Carr had no idea where the selling was coming from. And I think it might have been a hedge fund that was shorting it and chasing momentum lower. And then I think, a lot of these juniors have a lot of retail shareholders who are less sophisticated as to the ways of Wall Street, and they get scared when they see a stock going down, and then they sell, and so it's kind of the selling begets selling, and that's the only thing I can figure out. We actually went in and bought some shares in the high 80 cents earlier this week because I wanted to see. I put in some bids for some size. I wanted to see if the seller was still around, and if he still had a lot of shares. I think whoever was selling it, I think they may have gone away. But at any rate, I mean, I think this is like a 70% off sale to be able to buy this stock below $1. and especially, given the odds of having a good drill hole on the targets that they're drilling in this current drill program. I mean, like I said, they pull out some good assays from these holes that they're drilling, and this stock, it's going to shoot up like a rocket. The target that is all the geologists' most favorite, and this was what was interesting about how they form these targets. So Dave Mathewson assembled what he considered to be some of the best geologists he's worked with in Nevada at Newmont. And there's a guy from Barrick who mapped out the Barrick Cortez Hills deposit, and he's doing the mapping for Keystone. And he's supposed to be like the go-to guy for mapping Nevada mineralization systems. That helps you try and figure out where a deposit might lie. There were 5 geologists, and they all independently took all the data and all the previous prep work that they had done and put together their 5 favorite targets, or not their 5 favorite, but their favorite targets. And then they pooled all that and as a group decided which ones were the best ones. So I think the process that they used gives them a high probability of getting a discovery on this drill program. So the one that's their favorite is the Sophia target, and the geology of it is, without getting into the technical terms, is identical to the geology on Cortez Hills where the big discoveries are being made. And when they tried to drill it last fall, they lost the drill bit because they ran into a cave drilling where they wanted to drill. And that's actually the model, is you run into these caves. So they wanted to get below the cave. So they just finished drilling that core. They drilled below the cave. I think Ed said maybe 400 feet below. Can't remember. I mean, it's a deep hole. It's like a 2,000-foot hole. And they've got the core prepped and sent to the assay lab. So Ed told me that it's right now in Nevada, assay labs are on about a 6-week turnaround. So hopefully we'll see results by the first or second week of October. Possibly we'll see them before October, because he said he's been kind of on the assay lab to try and get a turnaround on it. So, and this isn't one of those things where the geologists can see mineralization in the core, because the nature of Carlin style deposits is that the gold in the core is microscopic, right? And you're looking at a good drill hole might be a gram or 2 grams a ton, and often it's less than that. So, but the beauty of the Carlin style deposits is that it's bulk tonnage, and it's typically a lot less expensive to extract the mineralization because they can use cheap processes.
Do you have any development companies that you're paying attention to, or maybe like an optionality play?
Sure. In fact, the company just had news out today, Mineral Mountain, and they're poking holes in, it's called the Rochford Project in the Black Hills of South Dakota. And similarly to Keystone, this project, I think it's about maybe 10 or 20 miles south of the old Homestake Mining gold mine, which at one point was the largest gold mine in the world. I think at one point it hosted 40 million ounces of gold. And this thing sits on the same type of fault structure, along the same fault structure that mineralized the Homestake property. And they've got tons of historical data on the property. They've done some preliminary drilling, and the geology is quite complicated but it's complicated at the Homestake property also. And they essentially ran out of money about a year ago, and so they've been trying to raise money because there's an old hole that Newmont had drilled, and Newmont had taken over the Homestake mine, and there's an old hole that Newmont drilled on the property, and it had 10 grams per ton of gold in the drill sample. And then Newmont kind of abandoned it because that was back when the price of gold was under $400, and it just wasn't. It wasn't. I mean, there was almost no exploration going on. And a lot of projects were abandoned. In fact, that's kind of how the current junior mining industry was spawned. A lot of these guys have gone around and accumulated or picked up abandoned projects that majors used to own. So at any rate, they finally got 3 million Canadian raised, and they want to use the money to drill this area that Newmont had drilled, and I think they're gonna try and sort of go at the same hole that Newmont drilled from a different angle, and it's kind of a complicated drilling process. But I mean, the stock's 14-cent stock, so I haven't looked, but I think there's probably 100 million shares pro forma the funding they just did, the financing, and that wouldn't be fully diluted. So yeah, so that now they have money to drill this. Now Nelson Baker is the guy who discovered the Rainy River deposit that New Gold bought, and he took that property over and formed, the Rainy River Junior Mining Company. No one else wanted that property, and he was like, I think there's gold there, and he found it. And I think, again, there's no guarantee here, and they may end up just drilling dusters. Who knows? But the probability of finding something, I think, outweighs the risk of buying a little bit of this stock at 14 cents US and waiting to see how this drill program pans out. Because if they make a discovery, this is another stock that, I mean, it'll double overnight or within a week, and it'll go a lot higher after that.
There was a company I was financing, Dave, I'd like to get your take on from the perspective of, is this good dilution? Back in early July, Mexican Gold Corp did a very unique financing in which they offered 50 million shares of the company at 8 cents per unit, and then they gave a full warrant for 5 years at 12 cents. So there was approximately 50 million shares outstanding for the company. Then they just issued another 50 million at 8 cents. And then, of course, with the warrants, now the fully diluted is at 175 million shares. So they just tripled the share count to raise $4 million. I mean, what's your take on this? Was this wise, or how do you view this?
So that actually brings up a good point about a lot of people, especially retail investors. I don't want to use it as I'm not using that as a pejorative term, but they get freaked out or they hate it when companies issue shares and they refer to it as dilution. Well, the problem is these are venture capital companies in a sense, and they can't walk into Wells Fargo and get a loan to finance their project advancement. So the only way to do it is to sell stock. And it's technically, when you sell stock, it's not diluting the equity if the money is put to use for a net present value positive project or investment, right? Because that means that you're getting more value per share, even though you have more shares. You've created more value per share for the shareholders. So these juniors, like Mexican Gold, for instance, in order to advance their project, they have to sell stock. So whether or not in this specific case whether it's going to be a dilutive financing or not remains to be seen. I mean, I don't really know the company very well, but if they can prove out, I think they say that they have a million ounce deposit, and I don't know if that's inferred or indicated or measured, but if they can advance that so that it's a bona fide million ounce gold or gold equivalent project, I think they call it gold equivalent, so copper, gold, silver. If it's a million ounce gold equivalent project, that's probably a ultimately, if they can advance it to a mine and produce 50 to 100,000 ounces a year, then the stock's probably worth a couple $100 million, and even more if the price of gold goes up. So that's the nature of these financings. So and I'd have to take a close look at Mexican gold to see if it was something that I'd be interested in investing in.
Dave, if I could play the other side of the argument, the stock was 40 cents in May of 2018, and I understand this isn't a company you have followed, but if I was someone who bought the stock at 40 cents or even 30 or 20 cents, and they did this at 8 cents, obviously I wouldn't be happy. So I guess that speaks to when we do speculate in these early stage venture companies, we really need to know the time frame in which we need to measure success of how they're going to use the money that we give them, right? Because if you're stuck and you entered 18 months ago, you wouldn't be happy with that financing.
Well, and that's the junior mining stock sector is littered with landmines. And what most people don't realize is that the odds of a company taking a piece of land where they think there might be mineralization in a deposit and actually finding a discovery that's worth a lot of money is very low, very low. So, so I don't know Mexico gold or whatever it's called. And so I don't, when it was at 40 cents, I don't know why it was at 40 cents. And the fact that it dropped to 8 cents may or may not be significant. I mean, over the last 18 months, we had a huge pullback in the juniors, huge pullback. I mean, there's good companies, with bona fide projects that lost 60, 50, 60, 70% of their value over the last 18 to 24 months. It's just the nature of the market. So that's why you don't want to throw your money into these things all at once, and you want to spread it around, which kind of brings me to a point that I've been trying to make to people about Eric Sprott. It's not necessarily like, it doesn't mean a company is going to be a home run if Eric Sprott puts his money into it. I mean, he's doing what I would be doing if I had $1 billion. And that is, he's going out and he's investing, a few million in dozens and dozens and dozens of projects. He's playing the odds that a certain percentage of those projects are going to be 10 baggers, but he also knows that a certain percentage of those projects are going to be worthless. And so that's what he's doing. He's essentially creating a highly diversified portfolio of junior mining stocks. And I think ultimately he's going to make a ton of money on that. But, if you take the case of Novo Resources, when that stock ran from, I don't know, I think 60 cents up to $6, and there was all this hoopla about who was investing in it, and I think he was one of the investors, maybe around $1.50 or $2 a share or something like that. And the stock ran up to $6. It's the same situation where a lot of investors paid $6 a share for that. I actually wrote in my mining stock journal, I advised, my subscribers, if any of them owned it at $6, they should sell it. And I mean, I think the stock's below $2 right now. And I think the stock is very interesting if it ever goes below $1, but I probably wouldn't buy it unless it was around $1 or below $1. So that's kind of probably a long-winded way of answering your question about when companies sell shares.
Yeah, and I guess another thing, just touching on Mexican Gold Corp before we leave that topic, is when I saw it was a new CEO that came in, and I don't know his mindset, but he did need to recapitalize the company. So to provide value moving forward, he has to have money. So he offered it at very attractive terms to new investors. It may or may not deal with the current investors fairly, in my opinion. But the type of investors, I guess, would be a concern too, because you're going to get a lot of traders that are going to come in when you're offering a full 5-year warrant at 12 cents when a gold company with 1 million ounce resource is trading at 8 cents. So when that 4-month hold comes off, those shares will probably flood the market, and then you're going to have that 12-cent kind of overhead warrant, huge overhead warrant on the stock. So just that was my concern as well, is what type of people are you bringing into the private placement?
That's really, if it's a bona fide valid project that actually has 1 million ounces of gold equivalent that's mineable, and taking into consideration all the risks that are involved getting a discovery to an operating mine. If you think that this is eventually going to be a mining operation, you shouldn't worry about an overhang at 12 cents, because that's a short-term technical thing that'll affect the stock price over the short term. But people who sell, like, again, I'm assuming, let's just make the case that it's eventually going to end up as a mine. So to me, that tells me it's worth somewhere between 150 million to 300 million dollars at today's gold price. So, people who sell the shares at 12 cents, and let's say they don't have to issue any more shares, which they will, but they're selling a company at 12 cents. So that would mean there's 175 million shares outstanding. They're selling a $20 million company, or selling it at a $20 million market cap, something that's worth potentially 10 times more than that. So, that's the way you got to look at these things. If you really believe in a project, you shouldn't worry about warrant overhangs and things like that. Yeah, it'll affect the stock in the short term, but that's why you save money, because when the warrants get exercised and the warrant holders, if they dump the shares, which not all of them will, it's going to drive the price down, and you go and you buy more stock.
Before you go, I'd like to have you engage an email I received from a listener in Germany, and it deals with potential banks seizing deposits in brokers. What do you do with your mining stocks, your stocks in general, but your mining stocks specifically? If you believe in holding gold and gold stocks, and you believe that there's a bullish case for them, if the banks and the brokerage houses go insolvent, what happens to my stock? And this was a question that the listener asked me to engage on the show. So what are your thoughts here?
It's a it's a issue that I used to think about and worry about a lot 10 or 15 years ago, because a lot of us saw what happened in 2008. We saw that coming, and banks go under. A lot of banks went under. Some banks were saved. And I guess the question is, if I own mining shares at an online broker like Fidelity or TD Ameritrade or whatever, what happens in the next financial disaster if we have a bank holiday, and what happens to my shares, right? So the argument is you should take delivery of your stock certificates, because if the crisis, there's probably going to be a crisis that collapses the financial system, and so we'll have bank holidays and stock brokerage firm holidays, and quite frankly, I don't think there's anything you can do about that. And I guess if you want to take the optimistic side of what it looks like after that event happens, if you own your stock shares, then you can present it to the company and get value for it, right? Or maybe the system starts back up and I can send my stock shares to whoever the new custodian is that I would be using. So I personally think that if you're investing in this sector, you should have at least half of the money that you've allocated for investing in it in physical gold and silver that you keep in your possession, because that's where the real custodial risk is, in my view. I mean, there's nothing you can do about, if stock brokerages go down and evidence of your ownership of stocks is destroyed. There's nothing you can do about that. But there's no reason to leave your physical gold and silver with a custodian, because if we have a bad event that happens like 2008, only worse, that gold and silver is probably going to disappear. So that's why the hardcore precious metals investors always advocate keeping custody of your own gold and silver. So, and then I've always just looked at the mining stocks as a way of getting wealth enhancement if there's an event that's, if events unfold that drive the price of gold and silver, up to 3 or 4 times the level where they're trading now. Imagine what that'll do to the value of the mining stocks. So if you have systemic continuity in that case, and maybe a brief shutdown, then you're going to have a mining stock portfolio that's worth a small fortune. So that's kind of how I handle that. I don't worry about taking delivery of my stock certificates. I like to have the ready liquidity of having a brokerage account that's functional. And I'm also kind of hoping that, whatever is going to hit us, when, I can see it coming and I'm able to sell and get my money out of the brokerage before it hits. And if it doesn't, who cares? Because I'll have plenty of gold and silver that'll be worth a lot of money.
Excellent. And I agree with you, Dave. And I like how you said half of what you're going to put in this gold sector, have it in physical, even before you invest in the gold stocks.
Yes, absolutely.
Well, you've been listening to Dave Kranzler, editor of the Mining Stock Journal and the proprietor of investmentresearchdynamics.com. Dave, as always, I appreciate your insights. Thanks for joining me.
Thanks for having me on again, Bill. I always enjoy doing your show.
Thank you for listening to this Mining Stock Education podcast. Please subscribe and share with like-minded investors. Visit us on the web at MiningStockEducation.com for more resources on precious metals and natural resource investing. At our website, you can also sign up for our free newsletter for interview transcripts, stock picks, and more.